ladies and gentlemen. It's Modern Investing on Pod TV. My name is Sasha Starr, and we have a guest today, Dr. Milan Sombrak. Welcome to the show. Okay, I hope he is coming. I've seen him before. And Jim Eat from Eat Foundation. Welcome to the show, Jim. Okay, maybe he will join us a second later. In the meantime, I would like to start with the review of the market these days. The market is acting perfectly. Today is Wednesday, market is up. And something tells me that the scenario, the usual scenario of all these malaise of September, October, some November, may not materialize this year. Although I do have cash ready for that scenario to materialize, hello Jim, hello Milan, but something tells me that probably not in cards. So I still have some position. Actually, I have only two positions fully hedged: AMD, American Micro Devices, and Netflix, which today is on sale. At least right now as we speak, it's down for some 4.5%. But that doesn't worry me because I have deep in the money covered calls also. In fact, in certain scenario, I could benefit from it if stock will close by, I think it was 20th of November below 405. Actually, it's not too far from it. So then I'll keep the premium. I sold each covered call for $35, which $3,500 for each call. So I would be more than happy to keep this premium. And if it will go below 405, I might as well get the stock and sell covered calls. But we'll see what scenario is going to happen. Jim, how is your trading going these days?
Well, I've been saying, I'm on the sidelines probably until about November because these are the days that I think have excess volatility. But it may not turn out to be the case this year. You never can, the trend is your friend until it isn't. And as Milan teaches us, I think that, what I would generally say, though, is that, the long predicted recession has not occurred, and I don't expect it to occur. And the reason is that we had a pandemic that caused a global breakdown of our distribution systems and caused scarcity, and scarcity caused prices to go up. And the Fed has been treating it as though it's been a normal type of inflationary period where the economy was overheated, which it was not. And so it started to raise interest rates, which was the historic way of dealing with an overheated economy. But what we've seen is that the global distribution system has gradually repaired itself and prices are starting to come down. So what we're seeing now is a drop in inflation without the cost of high unemployment, which is usually the pain that economy faces when you can bring inflation down. So we're still seeing people having jobs and record low in unemployment. Wages are still going up, although not as much as they were. So the economy is actually quite strong. It's doing quite well. And so I think that an investment in the American economy is still the best way to go.
Yeah, Milan, would you confirm that?
Absolutely. The investment in the American economy has done better than any other economy for well over 100 years. And it's likely to continue doing that. So investing in the American economy is the place to be. Now, anyone can equal the market. We can teach high school students, we can teach anybody to equal the market in a couple of minutes. Here it is. You open a margin account that allows you to sell covered calls, cash secure puts, and buy nothing but SPY that you put into your account. You're going to equal the market. It is that simple. Yet very few people manage to equal the market. As James said, the American market is the place to be, yet very few people manage to do that. For over 100 years, the American market has been the place to be. But why is it that so few people manage to do that? And if our viewers get nothing out of this program except to do what's required to equal the American market, that they can go home right now. It'll be worth their while. So equaling the American market is easy, yet very few people do that. The average net worth of people in their 60s in the United States is $120,000. If they people in their 60s average net worth. If they equal the market, it will be about 10 times higher. Why are they not able to equal the market? Well, it has to do with the great conflict of interest which exists between Wall Street and Main Street. If you take a look at SEC actions, put down on your computer SEC actions, Securities and Exchange Commission actions, period. And then beside that, put down the name of almost any bank, you will see that they have been fined in the millions of dollars for market manipulation, insider trading,
Yes.
misleading information about securities, the omission of important information about securities, stealing customers' funds and security, and so others. Now, in addition to that, there is the issue of hidden fees. You see that today transaction costs are nearly nothing. Many
Right.
Wall Street firms charge nothing for you to execute a trade. However, there are hidden costs, which would be, let's see, what have we got here? Legal fees, trustee fees, stewardship fees, bookkeeping fees, finder's fees, and who knows what else fees. And the list that I just mentioned, most people aren't even aware of them, even though.
Excuse me, explain what you're talking about. Where hidden fees and all that, legal fees and all that stuff.
Yeah.
How you encounter that? Where? How to find it?
Well, Sasha, they have to spell it out somewhere, but they do so.
Hold on. I did several transactions in the last week only. I bought and sold CIBC, Canadian Imperial Bank of Commerce.
And it cost you next to nothing.
I did sell puts on NVIDIA, bought them back at the profit. Where do I deal with this hidden fees, legal fees, and all disclaimers and all that stuff? Where do I find it?
Well, let me ask you a question to answer your question is, why is it that the average investor trails the market significantly?
Why would they care about average investors, though?
Most of us are average investors.
No, I don't consider myself average investor.
You're exceptional, Sasha.
I'm exceptional. I know that.
And
I'm developing my skills even further. And I refused to even think about average investor, what he's doing and all that stuff, because he is an average investor, and it wouldn't interest me at all what he does, where he pays,
Sasha,
and where he pays all his.
Well, Sasha, what I think Milan is saying is that the average investor runs into these fees, and sophisticated investors such as yourself does not.
At doing what? Are you incurring all this?
Well, for example, if you buy a mutual fund.
Oh, if you're buying mutual fund, I see. Okay, now we are talking about. So in order to buy American economy as a whole, you're buying ETF 500, right? Which is 500 stocks covered by. Still, there are fees and there are hidden fees and all that stuff. It's there. It's built into ETF, because otherwise you're much better off to buy top 7 stocks of S&P 500, eliminated 493 stocks, which are not going anywhere. If you take S&P 500 for last year, it's stale. It's not moving anywhere. It eats your time and money, except 7 stocks that are doing all the work for S&P 500.
Sasha, many widows and orphans who are left with a great deal of money hire a manager to look after that for them.
Yes.
And these managers frequently charge something like 1% of the size of the portfolio. That seems modest. But if you take a look at, say, $10,000 invested annually at 7%, and compare that to $10,000 invested annually at 6% over 30 years, that 1% difference, the difference in the income that the investor gets is nearly $200,000.
Okay.
At 7%.
Very simple question. Is it a goal of our program to help save 1% of their fees, what orphans and widows are paying their managers? I don't see it that way. We have completely different
Well,
I think what we want to do is tell people that to manage your own affairs. And
those people are not watching our program. They have their manager who takes care of everything and who schemes them, not only with this 1%, but much more than that. So, and we don't have these people are watching our program. So why are we talking about
okay, you would know your viewing audience better than I. But I generally talk to people that have sophisticated knowledge, and then I also talk to a more general audience when I make my suggestions for investment, because I think there's both people out there watching, and but if it's only a sophisticated audience that we want to talk to, that's one thing, and I can adjust my perspective to accommodate that.
Yeah, well, I don't believe that unsophisticated investors are watching our program, because first of all, they will not understand most of the things what we're discussing, except Milan, of course, ETF 500. And basically that's, we can devote 2.5 minutes of each program, and we are doing that. So, okay, here is what you do when you don't know what to do, when you don't understand what to do, you have lacking any knowledge of stocks or markets or so on. But you want to be there. Okay, here is for you a way to go. Buy ETF 500 and just keep it and enjoy it, and there are some adjustments.
I will tell this story, Sasha. When I was working for Charles Schwab, and Schwab was a discount broker before there was such a thing as discount broker. So he really plowed new field, and he also broke ground when he decided to start to sell mutual funds, and the industry just gave him a real hard time about that, because it was like, why are you going from the discount trading, which is getting all this money for you? You built a great business. Why would you bring in mutual funds? And then mutual funds became one of the biggest things that Schwab did, because most people were pouring money into these mutual funds because they were taught to diversify. And so mutual funds that actually help them diversify. So a lot of what people are hearing out there is not always in their best interest. And we talk about, and I think it's a good warning for a lot of people, when the talking heads are telling you to buy this hot stock, they're not thinking about making you rich. They're thinking about making themselves rich. They're selling you. They're not helping you.
Again, I'm even what Milan suggesting by ETF 500, he's also suggesting do it yourself investment.
Absolutely.
If that's the case, at what point you would talk to any advisor or any manager or anybody? Milan, frankly, when you're talking about interaction with Wall Street, and you're mentioning that Wall Street is not I totally agree with you, but who from our listeners, unfortunately, we cannot survey, we cannot talk to our listeners directly. I would be interested to find out what percentage of our listeners even think about money managers or mutual funds or anything.
I have an answer to what you're saying here, Sasha. Our listeners are sophisticated investors, and they have friends who are not. And they have relatives who are not. And they can say to their friends and relatives, look, I'm managing my portfolio myself. It's not a difficult thing to do. You can learn to do that in less than 5 minutes, and you will save that modest 1% fee that your manager is charging will, over a lifetime of investing, amount to a year's annual income. And we can show you how to do that. So the sophisticated investors who are watching this program have a lot of friends and relatives who are not sophisticated investors, whom they can steer in this direction.
And I also think there's a lot of sophisticated investors that just think they are. And aren't.
Well, yeah, Wall Street will make everyone feel like a sophisticated investor. Yeah, they laugh at your jokes, regardless of how bad they are. And they'll make you feel like you're a sophisticated investor, part of the deal. Yeah.
Well, as long as if you are trading the market by 39% instead of usual 40%, you're already well above average. Right?
That's true. Yeah, that's true. Yeah.
I'm not losing as much as the next guy.
And those few who lose only 38%,
Oh yeah.
they're geniuses. That guy lost 40%, that guy lost 39%, and I got only 38%. All the rest lost more than I did. So that makes me a great investor.
Sasha, you know, Benjamin Graham, who is Warren Buffett's mentor, said that achieving satisfactory investment results is easier than most people think. And why do most people not achieve them? The conflict of interest which exists between Wall Street and Main Street. Wall Street derives most of its
It's a mystery
income
to
from,
me.
from our trading actively. Eugene Fama, who is a Nobel Prize winner economist, said years ago, he said, your money is like a bar of soap. The more you handle it, the less you have.
Milan, again, I'm always wondering when you're talking
I'm gonna
about
steal that.
between investor and Wall Street, I'm wondering where is the conflict? Here's a Wall Street over there. You're over here. You're doing your own things. Wall Street is doing their own thing. At what point you're interacting that Wall Street is taking your hard-earned money?
Well, people like you and me who are investing on our own, and you know, I talk about the 6 points that successful investors have. The first one is save. If you don't save, the other 5 don't matter. The second one is do it yourself. It's easy, like Benjamin Graham said. The third one is buy the American economy as a whole, the strongest economy that the world has seen in over 200 years. The fourth one is buy and hold, don't trade. And the fifth one is adjust to your asset allocation when market movement throws it off, either up or down. And the sixth one is avoid complexity. If you cannot explain an investment to a 10-year-old, don't get into it.
Yeah.
Just these 6 simple rules will allow you to equal the market and become wealthy after a lifetime of investing.
So can you suggest to simplify what we are doing? Let's consider all investors. Some of them are listening to our programs, most of them not. I would divide them in 3 groups. One group which is losing on average 40%. Another group is that following S&P 500 program, as you're suggesting, and buying and holding, and so on. And the third group is somewhat similar to what Jim and I are doing, is selecting the best of the best, using option strategies, and therefore multiplying your return. I'm waiting for October 16th, which would be a year since I started my fund portfolio, and the profit is already well over 200%, and I'm now slowed down on trading because I want to finish my year with a 200% plus.
You know, Sasha, you're talking about derivatives trading, derivatives selling. Yes, you can beat the market doing it correctly. But you know, the vast majority of derivatives buyers lose their money. They lose 100%.
I don't buy anything. Yeah. I sell, whether it's covered call or a cash.
Sell. The only thing we should do is
sell.
This is one of the best lessons I think this show has given to me is only sell.
Only sell. Yeah. I remember many years ago, I had a junior company trading on Vancouver Stock Exchange, and I was making deals with a few brokers. Say stock was trading, say 40 cents, so I would sell them a bunch of shares at 30 cents, and then he would sell it to his clients or so on. So it worked most of the time. And now, one broker, though, he didn't agree to this transaction. And I asked him why. Everybody's happy. So he says, Sasha, you don't understand. I'm in the business of selling stocks, not buying. Okay? So this is the name of the game, selling. Get cash. So as long as you are getting cash and sign on your screen is green and green and green everywhere, you are in business. If you have red, you're in business, but lousy business. Should probably get out of that business.
Sasha, go ahead, Milan.
So tell us once again, Sasha, if doing the correct thing and getting these wonderful returns that you're talking about is so simple, why is it that 40% of investors trail the market?
I guess it's the same thing you can say about playing chess. Some people playing chess on the grandmaster's level and the world champion level and so on. And some people are playing on the level of 2000, and most of the people are playing on a level of 1500, if
Yeah,
that.
yeah.
So therefore, majority of the investors are chess players at the level 1500 or below.
The
Is that
one big
That's right.
difference, one big difference is this: chess players who have a rating of 1,000 or below are still having fun playing chess with other chess players of the same
absolutely?
rank.
Yeah.
And even with much stronger players, spot me a rook, I'll say to an international master
Yeah. Yeah.
like Brian, spot me a rook and play me again. Yeah, chess players are having fun at all the time when they're playing their tournaments. That's not the case with stock market investors.
Well,
Most
I have suffered excruciatingly in playing chess. I have had games where I have no space, no prospects of getting space, and I haven't lost anything, so I can't resign. So I'm just sitting there for hours losing.
So, when it comes to stocks, believe it or not, a lot of investors they have fun even when they are losing, because as long as they're in the game, if they treat it as a game,
Discretionary
no,
money too.
people do discretionary money. They don't really care whether they lose or win,
Yeah.
but the potential of winning makes them exciting.
That's like
I remember
casinos, right?
some people are buying, for example, stock, and they're making, say, even $100 profit, and they're very happy. And at the same time, they would lose $1,000. They say, okay, it was not my day. It didn't work out for me. Next time it will. I remember one friend of mine when he was considering investing in a penny stock. He turned it down. He bought it much later at much higher price, but initially he turned it down. What he says is that, look, for me, winning $100 or even $1,000, it's not a big deal. $1,000 that doesn't solve my problems at all. Well, it's nice. I will say thank you very much or so on. But even if I will lose only $100, it will be doom and gloom, and I will cry, and I just can't stomach losing. Doesn't matter $100 or $150. I can't take it. Winning $1,000, that's okay. It's not
This
big
is
deal.
when
So
you must know yourself, your own
it's
temperament.
very psychological again. Very psychological. It's the same thing like I probably told me a few times when I was flying in a casino in Atlantic City, and I was taking. It was like 35 years ago, $2,500 US. I was flying to Atlantic City in the morning and same day coming back. It was chartered planes at the time. So my goal was to come back with $5,000. So I wanted to double my money, and it was very hard game. It's my rule: when you lose 10%, you're out. So a
Mhm.
couple of times I lost. So finally, things started to work my way, and slowly, in the several hours, I already had $4,600. So my 25 plus I won 21, and at that time I stopped playing, and I started to think, why am I so greedy? I already in plus, I won 2,100. Why do I have to risk for the lousy $400? I have
Right.
to risk, and I will go down, and I will try to make it
Right.
back. I don't want to play anymore. Okay, I will just wait for my plane back home, and that's it. And I went for a boardwalk and just walking back and forth. And then something occurred to me. What if I just arrived from Toronto with $4,600 of my own money, and my goal is to win $400? How complicated is it? When it occurred to me, I didn't walk. I ran to the casino.
You just changed your mind.
It
Yeah.
changed everything. I made this $400 plus. I won actually thousand some $100, and I made certified check to my name,
That is
and
a great example.
bought some nice presents to my wife and so on, and
Yeah.
just flew back home. So the psychology has enormous effect on what you're doing and how you're doing. For example, before our program started, I cashed my very good position on the Canadian Imperial Bank of Commerce. I bought the stock at around $39, sold it today at $40.40. I had several thousand shares. Half of the position was secured by covered calls, and half was naked. And I had said to myself, okay, what if the stock will reverse, especially Thursday, Friday are not such a great day. You know what? I can buy it back on Monday if I really want to.
Yeah.
I cashed out that, and I cashed out this puts on NVIDIA that I sold last week. Cashed that as well, that profit, and so on. So I still have these two positions. I really don't care about them a lot.
Can
And
we,
most of everything what I have there is pure cash on my fund account.
can we get back to casinos for a minute?
Yeah, absolutely.
You know, the other day I was looking at the Human Development Index, which is put out regularly, and Canada placed number 2. Canada at one time, when Harper was in office, was number 1 5 years in a row. When
Wow.
you're number 1, where can you go except
Yeah.
that? So, and the top 10 or 15 countries, there isn't a huge difference. So I was looking for Monaco, and Monaco is not included in the Human Development Index. So I checked Monaco, and you know how much income taxes Monaco residents pay?
Zero.
0. Where do they derive their income? They derive it all from the casino, where Monaco people are not allowed to go in, except to work. And so the average Monaco income is much higher than Canada's, the average Canadian income. And so they're doing something right with these casinos where they don't allow their residents to work. They opened a couple of casinos in Singapore recently. And if you're a resident of Singapore, you have to pay $100 to get through the door. If you're an American tourist, which most of them are, you can go in at no charge. Yeah. So great source of revenue. And so we should do more of that. And most people, of course, don't do nearly as well as you were talking about, Sasha. Yeah. The best that you can do in a casino is enjoy the free drinks.
Well, yeah, you know, we're not recommending casinos as an investment, but unless you own it. But even Trump managed to go bankrupt with that. So
Yeah,
you know,
yeah.
it's not a sure thing. There are a lot of investment programs on the air, and I know when I was starting out trying to learn investment, I watched the nightly business report every day, and I was, you know, in the habit of experimenting with what they were recommending, and I would buy and I would track it, and you know, so I got much more sophisticated. But it was putting my money in and watching it that I learned my lessons, and getting involved that way. But I think that there are a lot of investors that are watching shows, perhaps this one as well, that aren't what we would call sophisticated investors, that aren't options traders, that are just trying to figure out how can I get into the market, because I need to get enough money to make a down payment for a home, and I can't do it based on my paycheck, my income. So I have to find something, and I don't want to go to a casino. I bought lottery tickets, that hasn't panned out. So the market seems to be the best place, but how do I learn?
Yeah, in the long run, yeah, that's absolutely unbeatable proposition, and it's much more fun. And you see, in a casino, the odds, regardless how good player you are, the odds are not in your favor. Even in blackjack, when you're playing without any mistakes, a basic strategy, you still have 3% in favor of casino. Okay, but still, even with these odds, you can do quite well. But in the market, but this is kind of a process. Okay, how much you can play in a casino with for an hour, 2 hours, 5 hours. Actually, I never play longer than say 2-3 hours. I have to interrupt the session, regardless I'm winning or losing. I have to interrupt it because you have to get freshness. You have to.
Yes, that's good self-discipline.
Yeah, it's a self-discipline. Now, on the market, though, the market always tells you something new. There is new information. There is new patterns. There is still so much to learn from the market. It's incredible. It's so much more interesting than say, play blackjack or three cards poker or whatever else you want to play. Although three card poker can be very rewarded. I remember in the Aruba, we went to the casino with Nava, and there was a wheel which showed the maximum price to be paid. And she asked, what is the price for? And she said the answer was that if you get royal flush, it's in spades. So it's have to be queen, king, and ace spade. You are paying at that time, the bonus was around $3,000 or so. Shuffle, and three cards I'm going against queen, king, and ace spade. So they brought the manager to figure out exactly how much money I should pay with all the bonuses, as my bet that I got, and so on. And when I told that to one chess player who was interested in casino games and so on, he was thinking about it, and he said, Sasha, you can't even imagine how many people are dying without ever having royal flush. That was his reaction. Okay, listen, with that, I would like to finish our today's program, and we'll see you same place, same time next week.
Thank you,
Thank you
Sasha.
very much. Have successful trading.
Thanks for inviting me. Thanks.
Bye-bye, everybody.
Cheers.
Bye-bye.